Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
You're watching Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions today, Ricus Reeders from PSG, Hole-in-One, Ruimsig, and Jean-Pierre Verster from Protea Capital Management. Be sure to send your questions through via email, stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV. Hashtag is Stockwatch. Gents, appreciate the time this evening. Notwithstanding, I get a sense, I know what your stock picks are going to be, so I'm going to pass this one to Ricus first, and I'm giving away the story here, but nonetheless, Ricus, Optasia listing today, and there's two sides to the coin. The one is we didn't get the giant pop that many had thought. The flip side is, well, if you didn't get allocation in the IPO, which no one got, what they were hoping for, second opportunity. Is Optasia on your list?
Yeah, it's an interesting company. I tend to not want to get involved with IPO specifically on their date of listing because there's such a lot of noise in the market on that, where people are either staggering it or the people that didn't get the allocation is now buying in. But certainly as an operation, it's interesting. It's certainly a nice addition to our local market as another avenue for growth. But yeah, just in considering it for myself or for my clients, I think it's always what tends to work out best when you wait for the dust to settle.
I take your point on that. Jean-Pierre, we'll get to you later on that. A question coming through, it's fairly broad, and I'm looking to invest in a global power company, either renewable or nuclear. I don't want coal. Do the panel have any ideas? Jean-Pierre Verster, a global power company, renewable or nuclear? There's a couple out there, but any that sort of grab your fancy?
Yes, well, if I think about renewable power, you've got wind, you've got solar, and then you've got the battery part of the renewable sector, which for me is the more interesting one, where we need to harness the source and store it, because you need power sometimes even when the wind does not blow or when the sun does not shine, and that's where the batteries come in. So the Chinese are really creating wonderful batteries and taking forward the technological advances in this regard. So my favorite is still BYD. It's known for its cars, but if you think about it, the most expensive part of the car is the battery. So it's the battery technology that's driving the attractiveness of the car at the pricing point that they can offer it. And then CATL is another Chinese company, CATL, also very good in that battery technology. The US has got some players coming up in this space. Again, Tesla was the pioneer. But I would stick to the battery technology. The solar guys, the Chinese again are hammering the US solar producers with much cheaper but equal technology type products. And then wind, I have not been a fan of wind when it comes to renewable energy. And a lot of the big wind stocks, especially there's a few listed in Denmark, the last few years have not done well, as some people overestimated how attractive renewable wind power is.
Yeah, that CATL contemporary Amperex technology, and they've got some astounding technology in their batteries. I think they got one battery that gets to 80% in 5 minutes, which is akin to filling your tank of petrol. Ricus, any energy from your side?
Yeah, Jean-Pierre has covered the battery side of things as well, and I agree with focusing solely on a company that does solar or wind, or maybe solar and wind is, I think the fanfare surrounding that has died down. The one that I have been interested for a long time is an American listed company called Next Era Energy, who basically supplies most of Florida with their energy requirements. So that's a nice annuity income. they are quite, they have been focused on green energy as well, whether it be solar or wind. What makes them interesting at the moment is that they've got a nuclear plant that they might refurbish and start up again, where most of that power is going to go to one of the, one of the big users. I think it's Google, if I'm not mistaken. So there's a nuclear angle as well. It's far easier to just refurbish an old plant than to build a new one. So yeah, you've got annuity income on the one side, funding your startup on the nuclear side, which I think is going to happen, and there's your extra income generation and growth.
Yeah, okay, I like that. I mean, there's a couple that you say that are sort of repowering. I mean, Constellation as well, starting with 3 Mile Island for Microsoft.
Yeah.
A question came through actually last week, and it was titled, "Please ask Mr. Reeders," that would be you, Ricus. Sorry, it came through yesterday. I said last week. "Please ask Mr. Reeders his thoughts on the Pepkor update. I know it's a stock he's long liked." Ricus, I mean, it didn't tell us a heck of a lot except that their fintech /flash is booming. But what your thoughts on the update, and if Pepkor's still a stock that you are liking?
In that space, yes, and precisely because of that, of the fintech side of things, that is the one reason, apart from their defensiveness as far as their retail market is concerned, but the avenue from growth as far as fintech is concerned was what interested me. The update that came through was very pleasing, and I haven't changed my view on that, so definitely still a hold when compared to the likes of Mr. Price and Fashini's and Truworths.
Jean-Pierre, Pepkor for you?
Yeah, I think it's a very good retailer, very good operator. When I look across the different apparel retailers, I do prefer Mr. Price at this price. And I also have a slight preference to ShopRite versus Pepkor. There's still a little bit of complexity in Pepkor. The flash business, financial services, Capfin, some furniture exposure. They announced also today that the purchase of those handful of brands from reliability, retailability has gone through. So yes, I wouldn't mind having Pep in a portfolio. If I saw it in the portfolio, I wouldn't sell it out. But my preference at current prices is for Mr. Price and ShopRite.
Question coming through around Meta Platforms. I've held the stock for a while. It's been a bit of a disappointing year, only up low single digits. My question is, I'm worried about the money they're spending on AI, particularly next year. They're going to go into debt, and I'm not sure what their revenue model for all their spend is. Should I perhaps be taking some profits? Jean-Pierre, I mean, they're part of the Mag 7. When you look at Meta Platforms, would you be taking profits? Is the stock you would want to hold at this point?
Yeah, the question that the viewer poses is the key question for just about all the Mag 7. It is, what is going to happen with all this CapEx spend? And obviously, all the CapEx are being spent by, call it the Mag 6, are being spent with number 7, which is NVIDIA, because they are buying their chips and they are effectively then building on those chips these different large language models, whether it's training them or then making them available to people. And the question is, well, if you spend all this CapEx, you probably need to charge more for this. And at the moment, people who pay for premium ChatGPT, they don't pay much. So how many more people are going to pay for premium? How much more expensive are they going to make the premium offer? And they need to do that because otherwise there is no revenue to justify the massive amounts of CapEx. The other answer is sometimes, no, you don't need to worry about revenue. You're going to get it through cost savings. And you see a lot of, not in the Mag 7, but a lot of large companies saying that they are retrenching and they're replacing a lot of people with AI, with systems that automate the work that humans used to do. So maybe it'll be 6 of the one, half a dozen of the other, where you'll hopefully get some higher revenue. But if you work in the cost savings, then you can justify the CapEx. But it's a key question that the market is grappling with. So I don't have a good answer for you, Simon. Whoever can answer this question and can see over the hill to what will happen with all this CapEx, will it generate a decent return or not, can probably make a lot of money, because that would inform whether you hold the likes of Meta Platforms and the others or not.
Yeah, and I pay $20 a month for ChatGPT, and they need a lot of $20 for OpenAI to sort of cover their costs. Ricus, for you, Meta specifically, more broadly, the big AIs, as Jean-Pierre says, the Mag 6, you're paying Mag 1?
Yeah, I don't own Meta, and I don't like Meta because I don't think. I'm not very fond of the CEO, and I'm sorry, that still is a governing principle, and I'm not concentrating on Meta, so it's either Google or Microsoft for me. As far as the whole AI story goes, Jean-Pierre has explained it very well. It's a revenue story going forward, an earnings story going forward, and whether that in future will justify the capital spend going on at the moment. There's still a lot of capital spend that's going to go on. So at some stage, a company somewhere, in the Mag 7 or adjacent is going to have a report that says, oh, our revenue isn't quite what we expected, and then they will, and then the piper will have to be played. But I don't think we are there yet. Not with the amount of development that's going on. So I'm not saying go and rush out and fill your socks with these things, but if I do have Meta, personally, I would rather redeploy it to some of the others.
Yeah, and of course Zuckerberg has controlling shares where he isn't not a majority shareholder, but he has control of the company. Two questions came through around Bidcorp. Ricus, the one is it hasn't been doing much, but is there opportunity? The other is concerned that they obviously earn a lot of foreign currency and the stronger rand might impact their earnings. Ricus, your thoughts on Bidcorp?
It's a well-run company, and obviously their rand earnings is under pressure because the rand is strong, but that's not what I think one should concentrate on, because the rand will do its thing. One should look at what the company is doing. The last set of results and the one prior to that was as good as can be expected in a Europe which is not exactly running on all cylinders. So at current prices, I don't think they're expensive, but I don't think there's anything that moves the needle as far as I'm concerned. So I'd be a hold at best.
Thoughts from you on Bidcorp? A good business, a tough space, but I liked Ricus's point around focus on what they can control. Currency is not one. Your thoughts on putting it in a portfolio?
Yes, I think it's a solid company. They are not going to be exciting and talking about AI and firing people and replacing them with algorithms or large language models. I mean, they trade in food, so they buy stuff and deliver it to restaurants and hospitality businesses, add a bit of value in between with distribution. But it's a relatively simple, easy to understand business that operates in so many countries that, yes, in one year or the other, some currencies will weaken and things will look a bit anemic on a rand reported basis. But in other years, you'll have the rand weaken and things will look great again. So it's one of those I think you can put in your bottom drawer and sort of forget about it. And the company will just chug along, keep on doing these tuck-in acquisitions, very cash generative. You'll get a decent dividend. And if they can keep on growing, at least at inflation, and grow their earnings per share slightly above inflation, then over the long term, that's a very nice return for a business that you can own while sleeping well at night. So I do like it.
Yeah, and it's a business that's about scale, and they've got that scale, and then they do very clever sort of bolt-on acquisitions. A question coming through around Rheinmetall, German defense company. Is it worth a look as Europe ups their defense spending? And then a follow-up question about 10 minutes later saying, the stock is up 300% in the last year. Have I missed the bus? Jean-Pierre, I mean, I suppose thoughts on the company, but have we missed a bus on a stock that's up, by my calculations, 270% year to date?
I think so. I think the time to have bought European defense stocks was in the couple of months after Russia invaded Ukraine.
Yeah.
And I think, I remember I wrote a piece for the Financial Mail and the tagline was "War, what is it good for?" And it's absolutely nothing except for defense contractors. So that was the one sort of obvious opportunity to say that if all of a sudden there's going to be more conflict, well, people will need more guns and more tanks and more ammunition. And Rheinmetall is right up that alley. So since then, to buy it now, I mean, now the plans have been announced. Europe is spending more. The budgets have been put aside, and there's some political wrangling. But how much more positive surprise can you get from European defense spending? I don't know. Unless Russia decides to also now try and invade the Baltic countries, which I don't expect in the short term because Ukraine is keeping them busy, then I think this is maybe as good as it gets. So I wouldn't rush into Rheinmetall at this price now.
Yeah, I remember your article, and I'm just checked the price. Well, about 100 euros back then, 1,700 euros right now. Crazy. Ricus, do you concur? Do you think it's worth jumping in?
I think the easy money has been made. The results are due, I think, today or tomorrow, if I'm not mistaken. I'd love to see what's happening there. But if you want to be in defense companies, I think that is possibly one of the top 2 or 3, because they make what is needed where it's needed, which is specifically Europe and the ongoing stress with Russia, which might flux. In other words, the news might go up and down, but I don't think that situation is solvable in the short to medium term. So the demand for Rheinmetall's products is not going to decrease all of a sudden, and your surprise might be to the upside. So I would, if I want to be in that sector, and we do get good news, which is bad news for Rheinmetall, and the price might go down, and I want to be in that sector, that's the one I'd be looking at.
Gotcha. According to Gemini, results due on Thursday for Q3. Well spotted there. Okay. Question came through, quite simple. We've had clicks, we've had Dis-Chem. Does the panel think either are worth investing in? Ricus, a clicks or a Dis-Chem?
A clicks wasn't bad. I still prefer clicks just from as the operator on the block with the most experience and the better track record. Price-wise, if you compare the two, clicks is, or Dis-Chem is outperforming clicks at the moment, but I don't think just because the price momentum is in Dis-Chem's favor that I would go for that. So I think at current levels and possibly lower, clicks is, I would add that to my account.
Jean-Pierre, for you, clicks or Dis-Chem, or neither?
Yeah, there's an interesting divergence in strategy. So Dis-Chem are going more the diversification, get more into insurance, broader, call it basic medical services, more clinics. Very interesting. You don't really have another company that's following that strategy. While Clicks is focusing on pharmacy and front shop, and a little bit of wholesale as well. But that's the focus. So do you want a focus strategy or do you want a diversification strategy? And in general, focused strategies normally win out. It doesn't mean it always wins out, because when you have a lot of balls in the air, it's easier to drop one. So far, Dis-Chem has not really dropped one. They talk about positive things that are happening also in terms of the culture of the business, which would allow you to juggle more balls at once. But because of this, I have a preference for clicks, but both for me look quite expensive. So to your point, Simon, if no one is forcing me to buy either, then I would wait for a better price on both these stocks.
Yeah, and that's the beauty of the market. No one's forcing. We can always sit out and wait. A pair of questions came through on Purple Group, and it's a small stock, so I'm not sure depth of... The one was asking, we saw the PSG numbers. They were strong. Purple results soon. Surely they were also going to have good numbers. And the other one saying, I bought it at $1.21, almost doubled view looking forward. Jean-Pierre, brokers generally in the market we have had for the last 18 months, this is where they make their money, in the volatility and bull markets.
Yes, because they generally charge brokerage fees, which is based on activity. So more activity, that's better for them. I'd be cautious to look at PSG and then think that's a read-through into Purple. Yes, both in financial services, but I mean, PSG is in insurance, wealth management, and asset management. And Purple, through Easy Equities, very much on the brokerage side, so more activity-based than asset-based. They do have what used to be called Emperor. I forgot the name now of the asset manager within that, but it's a relatively small business. So yes, it's been a while since I've looked at Purple in detail because it is small. But as long as they can keep the activity levels up and hopefully get the Philippines going, that'd be nice for them. Then it could be something interesting. But they need to show that they can take this model that has got very good media exposure and very good, call it customer awareness in the South African market, and transpose that into other countries like the Philippines. And if they can do that, then it becomes a very interesting proposition.
Yeah, and build the broader, I mean, they're bringing insurance, they're bringing wealth, but when I last chatted with Charles, I think the average customer had 1.2 of their product range, or maybe even only 1.1. It's still mostly an easy equity story. Ricus, for you, of course, you are PSG, so you understand well how it works, but they do lack the wealth management, the insurance, which is sort of your base in a sense.
Yeah, I mean, if you take a look at PSG, I mean, it started off with online securities and it branched off from this. Maybe it's the same story for Purple. So if they can build scale, as you said, if they can be successful not only here but start gaining traction in places like the Philippines, it's an asset lightweight model, if I can use that cliche. The price graph is looking terrific. I've got it I'm talking my own book, I've got it as a spec in my own portfolio. So so far so good, and let's see how that story develops.
Yeah, okay. I got a bit as well. I'll confess to that. Looking quite nice. We need to go to some stock picks. Ricus, let's start with you. You're going with Shoprite.
Yes, Jean-Pierre mentioned it at the start of the program as you know, a sort of an alternative to Pepkor, and I think that's my thought as well. If you take a look at what happened with Pepkor in a consumer market like we have, focusing on your lower income market and executing that strategy very well, I think the same is going to be the case for Shoprite. They also do a quarterly update. Their last results were terrific. I think they executing their omni-channel very, very well. And considering where they are priced at the moment, they haven't been cheap in a very, very long time, but they're certainly not expensive. Technically, I like the picture, and I think if you want to be in the consumer side, Pepkor on the one side, Shoprite on the other.
Yeah. Jean-Pierre, you're going with Optasia. We touched in the beginning of the show. I'm going to add a quick question to it as well. Someone said to me, is this the founders selling more? My understanding is there's lots of lock-ins. Some of those lock-ins are 185 days for founders, management 360 days. It's probably just the market working. And is your stock pick today?
Yes, I think we should put it in context that the market was down, call it 2% today. Yeah. So then if your stock is up 2%, that's not bad. You've outperformed by 4%. Would have been nice if it popped to above 20 Rand, but 19 Rand 38, exactly 2% up from the 19 Rand placement price is not bad. And that gives you an opportunity, and that's why it's my stock pick. You can effectively buy it now at not much more, 2% more than the placement price. And I think they still have a couple of years of very strong growth to come. The big test will be, call it 2 to 3 years from now, to see what happens to bad debts, because they have moved from scoring people for airtime to scoring people for unsecured loans. And that for me is a different demand. It's a different customer. It's a different credit risk. And through their guarantee structure that they have with the banks, because you don't see the loans on their balance sheet, you don't really see the bad debts on Optasia's own balance sheet. It's a balance sheet light business model. But you'll see it indirectly in 2 to 3 years when some of those guarantees maybe get called by the banks. If the bad debts turn out to be worse than expected, that's going to be the test. But for the next 2 to 3 years, before we get to that point, there's a lot of expansion opportunity, whether it's in Asia, other operators throughout the world in emerging markets. And as long as you keep on growing, then sometimes it doesn't even matter if your bad debts are slightly higher than what you anticipated, because the growth in the book makes up for that. So I do think for the next 2 to 3 years, it's going to be a good story. And if you can get in at the bottom range of what the IPO price was, for a business-like model, very high returns on capital, I think it looks interesting here.
Yeah, that's a good point. I mean, if you put an allocation and then you got your 14% and you're disappointed, for an extra couple of percentage points, you can get the rest of your allocation. Would it be nice to see it pop? But you've got a second bite, and maybe that's the key point. That's all for Stockwatch today. Thanks to our guests, Ricus Reeders, PSG Hole-in-One, Ruimsig, you're going with ShopRite, and of course, Jean-Pierre Verster, Protea Capital Management, going with newly listed Optasia. Up next, the close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.